This is Rick Rule from Rule Investment Media, sponsors of the Boca Raton Natural Resources Investment Symposium, July 7th through 11th. Attend in person in Boca Raton or live stream from the comfort of your own home. The interviews that you're currently listening to are interviews with exhibitors who will be at the conference. The reason for this is that we have 50 hours of programming over 4 days. You'll never be able to absorb all the information that we're going to give you. The consequence of that is that we want you to be familiar with our speakers and exhibitors before you get there so that you can allocate your time correctly. I'm delighted today to begin my interviews with Andy Schectman of Miles Franklin. I'm delighted to say that I and my predecessor businesses, including Sprott Wealth Management, have known and done business with Andy for almost 2 decades. Andy, thank you, first of all, for exposing us to 2 decades of complaint-free service. And thank you, too, for your ongoing support of the Boca Raton Natural Resources Investment Symposium.
Well, it's a true honor, always has been, Rick, and it's my privilege. And thanks for having me, and looking forward to chatting with you today.
So tell us something about the services that you offer. Tell us something about the bullion products that you sell. And then we'll go on to who specific products are suitable for in the rest of the discussion.
Yeah, I guess when we're talking a homogeneous product, the product is irrelevant. We sell everything. We're full service precious metals company, and I think we're the envy of the storage industry in worldwide exclusives with Brinks. But to me, what differentiates Miles Franklin from others is, yes, we've had a great run with you and complaint free. That's something that I've really strived for in my relationship with you and your clients. But on a broader scale, we've never had a customer complaint in 34 years, ever. You can't find one online. It's something I'm still quite amazed at. In almost 10 billion in sales, we've never aggravated someone so much that they were motivated to write something online, thankfully. And we're also domiciled in Minneapolis. Now, I live in Delray Beach, Florida. I moved here 3 years ago, where we've had a satellite office. This is just a few miles away from the conference in Boca, but we've had a satellite office in downtown Delray for 15 years. But I left my corporate entity in Minnesota for one reason. It is the only state in America that regulates what is a federally non-regulated industry, almost similar to the regulations that licensed security brokers would have to face. And we're licensed, we're bonded, we're background checked. And so it holds us to a much higher standard. So on top of our reputation, our accreditation with the state, and the fact that we're one of 27 authorized resellers to the U.S. Mint, these are the things that differentiate us in an environment where companies sell the same product. I guess I would just simply say that I think it's important to buy the company, buy the name, instead of buying the product. And that's really been what we've hung our hat on for all these years.
That notwithstanding, Andy, I get questions every day at Rule Investment Media and through the Rule Classroom about various products, about which ones are better for different accounts. I'm sad to say that I don't know enough outside my own account to comment. Do you have a preference, as an example, between bullion itself, which is to say recognized bars, or sovereigns? Are the liquidity, as an example, in coins worth enough that you think they're deserving of the premium that they enjoy over other forms of bullion product?
Yeah, and it's also important to note, you're right, the premium goes both ways. And I am an advocate, I guess you could say, of the bullion coins made by the Royal Canadian Mint or the United States Mint. It goes both ways. The premiums don't just get you when you buy it. You also enjoy those premiums when you sell. And in fact, if we go back to 2019, the premium on a Silver Eagle, this would be a good example, would have been $3.39 to buy, $2.65 over spot to sell. In other words, if you're going to buy it, you're going to pay $3.39 an ounce over the price of silver. And if you sold them, roughly $2.65. And Rick, it was that way for most of my career, but we go 4 months deep into 2020, and companies around America were selling those coins for $14, $15, $16, $17 over the price of silver. We were buying them back for $11, $12, $13. Big spreads because you can't hedge the premium. But suffice it to say, I want people to know that premiums go both ways. But something's happened over the last few years that I never thought I would ever see, and that is a drive by many states in the United States, I don't know, approaching 20 plus, that have passed legislation or have legislation this year in front of the legislature to allow legal tender coins made by a sovereign mint, such as the RCM or the U.S. Mint, to be used for all debts, public and private, including such things as paying your property tax, which is something I never thought we would see. So if I'm making a distinction between what I would rather own, look, the difference in premium or cost between a 1 ounce gold bar and a 1 ounce American Eagle, maybe 1 or 2%. And the same thing would be true with most silver sovereign coins. So for my money, I think it's better to buy the brand new sovereign mint coins by one of the 6 major mints of the world: the United States, Canada, Austria, Australia, South Africa, or the United Kingdom. To me, those are synonymous. This may be a dumb example, but Pepsi, Coke, Sprite, 7-Up, Dr. Pepper, they're the same thing, and everyone recognizes them. And most of the legislation says any sovereign mint coin. A few of them say U.S. mint only, but for my money, if I had my druthers, I would always buy those coins because they're immediately liquid and in demand anywhere in North America, which is, I think, a good thing to have in your portfolio. That liquidity piece is important.
So am I correct in hearing that from your point of view, you need to look at both sides of the transaction, the bid and ask, and think about the spread, the relative spread between the bid and the ask in the context of the liquidity in the underlying instrument? Did I hear that correctly?
Yeah, absolutely. I mean, you can have the greatest thing in the world if it lacks demand. What good is it? As an example, 1,000-ounce silver bar, you get it real cheap, right? But the bid on those right now is back of spot. No one wants them because it's called the cost of carry, which means if I have to buy from you, if you called me up and said, Andy, I need to sell you 20,000-ounce bars, I'm not going to let those sit on my shelf. Of course, I'm going to buy them back from you. But chances are I'm either going to send them to someone who wants them, and if not, to a refinery at a slight discount because of the cost of shipping and the cost of refining. So on larger items that don't have demand, like a kilo bar of gold, no one really buys those. We did over 900 million in sales last year, and I bet you we didn't sell one. But if someone wants to sell them, we will. But because really the retail public doesn't buy those, they'd rather buy 1 ounce gold bars and buy 32 of them instead of 1 kilo bar that weighs 32.15 ounces, have all that extra liquidity and flexibility at a very, very tiny premium. That kilo bar would sit and collect nothing but dust on my shelf, and therefore the cost of carry means that almost every dealer in America is bidding $4, $5, $6 back of melt value on those, because when they take them, they're going to have to flip them to someone else and ship it, or send them to the Royal Canadian Mint and have them melted down for what's called pool credits that we can use to buy Maple Leafs down the road.
So, like every other investment question, there's actually no one-size-fits-all answer. It really depends on the needs of the investor. Tell me something about how Miles Franklin goes about ascertaining the needs of investors, and tell me about how you go about customizing, if you will, the holdings of the portfolios on an individual basis.
Yeah, well, I mean, you have to ask questions. You have to ask, what are you trying to achieve? What is your time frame? Is this something where you're going to need the money very quickly? Is it something that, are you looking for flexibility? Are you looking to trade from gold into silver, from silver into gold and play that silver to gold ratio? I mean, there are a million things. So questions are always the first course of action. Are you looking to buy? Here's a good one. Are you going to buy a precious metals IRA? One of the features with the precious metals IRA is the distribution feature called in-kind distribution, where, hey, send me my metals as a distribution. It's a taxable event. So if you have a precious metals IRA and you're planning on maybe taking possession somewhere down the road, then we don't want to get you big bars. We want to get you 1 ounce American Eagle gold and silver as an example, or Canadian Maple Leafs or whatnot. Maybe someone says, no, I just want to play the price. And I probably will never take possession. I'm looking for the biggest bang for the buck. Okay, then let's get you 100-ounce silver bars and maybe 10-ounce gold bars or something along those lines. Even though the premiums aren't as good when you sell them, you will get the biggest bang for the buck, unquestionably. They're just not as good in terms of liquidity on a day-to-day basis. So there's always questions to be asked, and I think it's very important to do that, and more importantly, to listen to what the client is saying. And really that's why we've always maintained a hybrid brokerage model. Sure, I could go completely online like the online companies and make more money, but that's not who we are. That's not who we'll ever be. I prefer to have the relationships and to, tailor portfolios and strategies to, as you mentioned, individual needs and desires. And it's worked out very well for us. Going on 35 years in business. This winter will be 30. Next winter will be 35 years, and we've done it the same way ever since day one. So there's no need for us to change at this point.
And in terms of portfolios, do you traffic in numismatic and semi-numismatic, and how would you differentiate between bullion and semi-numismatic and numismatic from a portfolio point of view?
Yeah, I mean, the coins over my shoulder in the picture with President Roosevelt, that's the executive order he used to confiscate an MS-62 St. Gaudens right there. So, yeah, I mean, we do. And I love the semi-numismatics. And I, there used to be a time, Rick, when no one bought gold bullion, when gold was $300 and $400 an ounce and American Eagle was $4.25, based off $400 gold, and a $20 gold piece in a certified 62 or 3 grade may have been $460, $470. No one bought bullion. They bought those. And for a long time, that's all we sold. And I understand the market really well. When Obama when it was almost guaranteed he was going to take office in 2008, right before he did take office, the perceived threat of confiscation became insane, and the premiums on those coins went parabolic. So I called every one of my clients that I had done business with for the 15 years prior and said, you need to trade me your numismatic coins right now. We need to go into gold bullion, because there are a handful of auction galleries, big ones, that are as dumb as a mud wall. They're bidding premiums that I've never seen before, 70, 80, 90% over melt value. Let me buy them back from you, sell them to these companies, and switch you into gold bullion at a 70 or 80 or 90% gain in ounces. And that was something that was probably the most successful trade of my career, and for all my clients. And, the premiums have never really normalized since then until just recently. And they've come down to a level where I would actually think about owning them again, because you can buy a certified semi-numismatic pre-1933 gold coin pretty darn close to a gold eagle. But let me just simply say this. Modern minted collectible coins, to me, is as foolish as lipstick on a pig. You do not buy modern minted stuff. If you're going to buy numismatic coins after you have already accumulated and understand gold bullion and silver bullion, then that's fine, but stick to pre-1933 US gold. The stuff that's modern minted, the First Strike and the MS-70 and all this stuff, it's nonsense. And it's more or less a story created by companies that are trying to pry money from your wallet. Rather, the coins over my shoulder, the pre-33 US gold coins, are a true reflection and piece of Americana. They have proven to retain value and sometimes accentuate it, but they're not the first approach. It's like a hot fudge sundae. The bullion is the vanilla ice cream. You want to start with a big bowl of it. If you want to put some hot fudge and some cherries, on top, great. But that's after the fact, after you've built your portfolio of bullion and understand what it is that you're getting into. Semi-numismatics make it much easier for people to understand. It's for the sophisticated investor, and nothing bothers me more than when I hear people are spending, thousands and thousands and thousands or tens of thousands on one coin or two coins, and that's their portfolio. They don't know what they're getting into. They're doing it for profit potential. So all of those things we would discuss with clients, make sure they understand what they're getting into, make sure we ask them the right questions and that they provide the right answers before we go down that road. But I will say this, and this is the truth. If I had my druthers, I would own nothing but pre-1933 US gold and silver coins. To me, they are the best way to do it, but only if the premiums are in line with gold bullion, so that the opportunity cost is not such that you end up paying most of the money for collector premium and less of it for the actual metal content. So there's a fine line there, and we're always trying to tread it. And if there's an opportunity, we let our people know.
Andy, clearly a differentiated and nuanced market rather than a simple one. If our attendees, many of whom are interested in bullion, want to learn more, who at Miles Franklin should they talk to, and what is the contact information that's
You know,
valid?
I've been consistent with this, Rick. I view my relationship with you all the way back to Global Resource as a amazing honor, and you're one of the people I've looked up to for a very long time in this industry. And so I and myself alone will be the one that will talk to your people. And I don't make this, in fact, you're the only person that I ever say this to. And I know this is going to get sent out to YouTube, and I'll probably regret it, but I've been doing it every year now. So they can email me at andy@milesfranklin.com with any questions, and I will personally answer them, and I will personally respond to them and provide my phone number if they wish. I would have it no other way. Now, that's not to say that the people in my company are not capable of handling it. They are. But it's a promise I made to you a long time ago, and it's a promise I intend to keep. So they can send me an email personally at andy@milesfranklin.com, and I'll respond whatever the questions are. By the way, we do have a website with current pricing, but for those that want the really good price list that we keep close to the vest people have to ask for, it'll be as good as anywhere in the country. Andy@milesfranklin.com, send me the price list, and I will do that with no obligation whatsoever.
Well, Andy@milesfranklin.com, thank you for 20 years of complete free service, and thank you, too, for your ongoing support of the Natural Resources Investment Symposium at Boca Raton. I look forward to seeing you there. Thanks again.
I would have it no other way. Thank you, Rick. Look forward to seeing you soon as well.